All right, hey guys, it's Axe with a evening PCRI's update. We've had quite the whirlwind, I guess, past 3 days. This sort of line graph says it all, right? I'm in a week. Let me switch for you here. Um, we had a nice little rally that was sold off and sold off hard, and we're now basically at the March lows. So, a couple things real quick. It sort of nullifies the 2010 paradigm. One of the paradigms I'm liking is this 2020 September October. And if I just pull that up real quick before I get into the PCRs, you can sort of see from this perspective that retest of that sort of that pivotal area, and we're in sort of a similar thing here. Um, I could pull this down here and it'd be more accurate. Retesting this area, retesting this area. Those are just things to keep an eye on. And I've posted some charts, and I'll post more charts about the correlations here. But these are quite similar. If you look at the charts, and we would expect to see a bounce, and the lows hold for that to continue, and maybe back to 3600 by next week. But anyway, let's go to the PCRI. So when we last left, we had capitulation, right? Or at least capitulation reading or near it. We hit the green dots here. This was not yet green, overheated yet. This was a little bit lower, but this had hit, right? So, and we said normally when we get up to here, it's a reversal. You can see again, this was January 21st. All of these hit at the same time. And we were near a low. And since then, we've sort of had lower highs. And you could say, okay, well, maybe we have a breakout here. And that's a bit of a concern. But a lot of times breakouts, just to be honest here, breakouts don't really manifest into much. But actually, that's funny timing because that's that September October move. But anyway, it could. Let me backtrack. When we do breakout, typically what we'll see is, as you saw here in the first down move in COVID, right, where we spiked up, hit capitulation, a small little drop as people try to buy the dip, and you can see a little blip right about here. But then as we continued to go lower, it just spiked. And then we had a little bear flag rally that brought the call ratio down. When I say rolling over, we rolled down towards calls. Here we didn't have that at all. We had that little pause, but we kept selling, and this stayed fixed. So when I say the PCRIs didn't move, that's what I mean. You can see right here, they hardly, I mean, it's a little bit of an uptick, but it's an uptick that's less than what we had here on this up day. This was a little bit of a down tick, and that was a little bit of a down move. But you can see through here, this kind of move in general, it doesn't happen. Usually it happens on up moves. Here we sort of got an uptick. This is October of 2021 on a little bit of a down day, but you don't see that sort of little uptick. Here we go, maybe September of 2020, where we sort of began to finish off the move. The point is, on a move like we had today, especially reversing from 4600, reversing off the 4510, reversing off yesterday's rally, you would normally see massive capitulation. You would see this reading just spike. And all we did, we saw sort of this lower reading, sort of the momentum, the fear gauge, as I call this one. That finally hit overheat. It got a green. And real quick on this, if you back off, and I'm just going to take the annotations off to make it simple. You see we have 3 in a row here between, November and now. We had 3 here in COVID, but we haven't had 3 maybe this period here, but people were overreacting. You can see there wasn't really much of a down move. But even during 2018, we didn't really have 3 back-to-back like that. So we got this on COVID, down on this, I guess you had a 1, 2, 3, 4, 5 on like when we finished the third wave, working on the 4th retrace, we sort of had that here. So the reason I bring this up is, number one, this is unprecedented, especially given the move. We're still at the lows from March, right? So we haven't significantly breached the lows. We did undercut some lows and from January, and that's okay, but we didn't have a real breach. NASDAQ did make some fresh lows, but they weren't extreme. But anyway, so given the nature of this move, yes, it's been a pain in the ass. It's been a long move. It's been a battle for 4 months, right? But it's equal to COVID. COVID was more compressed. I'm just sharing it to let you know how significant people have, like the fear is, right? So this measures fear. But here you can see as we move down, they didn't sell into this. And so what we would expect is to see selling. And if this spiked, either retail's freaking out and capitulating, or smart money's sort of hedging or buying puts into this. And we didn't see really any of that. It just sort of stayed flat. And in fact, this lower momentum right here printed a much lower high. So we have equal highs here and then a lower high. Same one down here. So essentially the technicals are fading. Normally, for this down move to continue, we want to see these spiking, right, and building some steam. And they didn't do that. Instead, they're just sort of moving up and sort of, you could think about it as like a plane that it slows down too much in the air. It's going to start to stall and crash, right? That's what we might see here. The flip side, one thing to be careful of is if they're not in a hurry to hedge, but we rally tomorrow, let's say we rally tomorrow and we retrace half of this or part of it, and we see more hedging here, that's a concern, right? That means they're selling into that. But if we rally tomorrow and we see this, what we want to see is this move come down, right? And we start to see these roll over. So when you hear me say roll over, that means I want to see these indicators turn over and go down. If that happens on a rally, that's bottom confirmation, or not confirmation, but we're moving closer to the bottom. If we rally and you see this go up, that becomes problematic. It means they're selling into it. The point is, when we have a big down move like this and we don't see a huge spike in the technicals here, that usually means that this fade or this down move is about out of steam, right? And it could mean, yeah, we just have a little spike up, a couple day spike that begins the next leg down, but at least we're going to get a spike, right? We had a similar reading here, and we got what is this? We went from 42.25 to 43.84, 43.87, and this is the closing print again, so I think we were probably a little bit higher. But anyway, so we're going to at least get a couple 100-point rally. I'd like to go back test this 43.90, 43.60 to 43.90 if we can get it over the next couple of days. And then we'll see what's going on. But the point is, if we go back historically, if I compare to this 2020 move, the reading is pretty close. Let me just scroll back in here. You can see here on the momentum indicator, it capped out about the same spot. This indicator here, the fear indicator, we overshot it a little bit today, but in general, it's pretty close. So what we saw here was, as we bottomed out, this sort of chopped around, and that's typically what we're going to see as we're bottoming. And so that's what I want to see over the next couple of days, right? Because even if we rally, the people aren't quite sure that the move is over, that the bottom's in, so they're going to still try and hedge. But what we don't want to see is a huge amount of hedging. We want to see this chop a little bit. So, going back over time, if I just remove a couple of these again, you can see this could break out. I don't want to see. We have lower highs here. We don't want to see this break out higher. That would be bad. We want to see these lower highs maintain, but we're still pretty close to the spot where we're going to get a bounce. So I don't want to be long-winded here. I don't want to take too much of your time, but I sort of want to give you an indication of what's going on. You could say we've got like a breakout here, and then we're going to print a lower high, and we want to see this come down, and you could even get into like a little head and shoulders action here. The point is that the indicators, like we spiked and we came back down. Once you spike and start coming back down, it usually means the bottom's going to start forming. So that's the behavior we see here. That's the behavior we want to see. And again, it doesn't mean that a bottom's in. It can take time, right? You see here in this August of 19, we chopped around at the lows. October of 2020, we still chopped around a couple days. We just don't want to see this huge uptick, right? That's the main thing we're watching for. So it's constructive. The price sucks, but today when I see this sort of sit flat, that means they weren't in a hurry to sell into it, and we're probably going to get, worst case, we get a little bit of something like this that rallies and sets up the next leg down, and that can happen. Or at least we have a spot to get short from, and if we're long and we're underwater, we have the ability to cover that or hedge it. But for now, we're really stretched. This is overheated. We've got lower highs that are fading in momentum. we have the potential to bottom out here. So let's for bulls, let's cheer for it, and for bears, we want to see how this reacts, right? As we rally out of here. So that's it. Let me know if you have any questions. Thanks a lot.